Good afternoon, everyone. Thanks for joining us for an update with Talisker Resources. We have CEO Terry Harbort here today to answer a bunch of questions. Rather than do a run through of the presentation, this really will just be an update. So we have a bunch of questions that we've received in advance. And for audience members participating live, feel free to input any questions you have in the Q&A box at the bottom of your screen, and we'll get those answered. As always, this presentation contains forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website. And as I mentioned, this will be a Q&A, so feel free to ask away. With me, I have my colleague, Magda Gardner, who's going to handle some of the questions. And with that all out of the way, let me introduce Terry Harbort. Hi, Terry.
Hi, Deborah. Hi, Magda. Thanks very much, everyone, for coming along. It's been a bit of a hiatus since we've had an update. We haven't had much to talk about. Limited drill results coming in as we're coming into this resource. So we sort of accumulated all the questions that have been coming in over the last month or so, and a few related to the last press release. So happy to answer those or any more questions about the drilling we'll be doing, results coming in, resource, and where we're heading to next year.
Sounds good. Magda, do you want to kick it off with some of the technical questions?
Hi, Terry. So last week you had a press release, and part of the press release were assays from the North Vein on the King mining block. And the press release mentioned that these are from the 2022 pre-resource drill program. So can you tell us a little bit about how that was different than the resource drill program?
Right. In reality, it wasn't at all. All of our drilling's pre-resource, so there's actually no difference between that drilling. It was all part of that big program, 140,000 metres. So it might have been just some confusion in the wording there. Really, everything's pre-resource coming into this 2022 statement.
Thank you. And then the press release also mentioned that there had to be assays that needed to be re-assayed because of an initial laboratory failure of QA and QC. So can you tell us a little bit about that process?
Sure. Look, it's the reality is, Magda, it's something that happens all the time. Labs put in standardized sample values or control values. They put in blanks, they put in duplicates, and we actually put our own hidden ones in that the lab doesn't know where they are and what the values are, and we check that against the lab. So there's a double-faceted program of quality control, one run by the independent laboratories and one run by us. So often what happens is if they don't meet, there's a certain level of standard deviation of values that we're willing to accept as a company with the assays that come in, and the laboratory have their own independent standards. They're usually ISO 9000 or whatever the ISO is, controlled. And if they fail those results, then all of the samples in that batch go back for reassay. So it's something that happens quite regularly, depending on the laboratory. Some labs fail a lot, others only fail a little bit. We're with ALS in general. They have a pretty low failure rate, so pretty high quality. And when it's a failure, it isn't necessarily a reflection of quality of the assay lab or the sample prep. It's something that can just occur. It has to do with a whole number of facets, whether it's cleaning, whether it's drag of one sample across another, whether it's some calibration issues with the machine. It's a whole number of things that could actually cause those. So it's a regular part of our process, and we plot our own, the lab plots theirs, and we control it. The main reason that we bothered to mention it this time is that it was the very last drill hole and very last certificates that we'd sent to the lab that we needed for the resource. So that had an implication, that is it delayed the completion of our resource, because everything's dependent on those assays. And we can do a fair amount of modelling of the veins or wireframing, so it's building a volume. We bring the results in, we calculate the resource, we pass it to the QP, but we can't do any of that if we're still waiting for assays. So even though it occurs all the time, we usually wait for the new assays to come back before we release them to market. And we never mention them because it's part of the general process of the business. In this case, because it was our last ones and it delayed us in the modelling of the resource, we thought it was prudent just to tell everybody, look, this is what happened. It was a standard thing. The lab just failed. We had to send them back. They were rerun, but that rerun takes 6 to 8 weeks. And then we've got to rerun the quality control, remodel the veins, redo the wireframes that those holes intersected before we can calculate a resource and send it off to the independent QPs. So really, that's what it was all about.
Thank you. And then the second part of the press release talks about stope optimization and that this needs to be done before you can release the resource. And it also mentions a new requirement to meet reasonable prospects for eventual economic extraction. So is this something new that's going to be impacting all resource releases for everybody going forward?
Yeah, it is. It is. It's something that was first mentioned at the end of 2019, early 2020 by CIM. And it's something that's gradually being brought in by the Securities Commission. And really what it's attempting to stop, I guess, is resources that are that never have the probability to become a mine or a mineable or an economic resource. So I suppose in the open pit scenario, this is akin to running a pit shell. Prior to people using Whittle, which can calculate a pit shell and calculate economics for an open pit, people would just drill resources that are potentially open pittable and not put any constraints on them. So what would happen then as we go from inferred into indicated or M&I resource, there'd be a large reduction in the resource. And a lot of investors come in and they think, oh, this thing's going to be 10 million ounces. And then when there's economic constraints put around it, there's only 1 million ounces. And it has a massive impact on shareholder confidence and also on the confidence of the project and the industry in general. So I can understand why it's coming in. And this is more or less a similar thing, but in underground mining. So we're required now to put economic constraints and mining constraints. So a minimum mining width, a stope height that we would mine, an economic cutoff grade based on what the mining costs and extraction costs and metallurgy costs would be for a project. So in a way, it's very positive from a shareholder perspective because it means the resource we come out with at an early stage is probably pretty close to what an economic or mineable resource will be in the future. And historically, inferred resources had come out, and then when that would get converted to indicated, there'd be a massive drop in tonnes, a massive drop in ounces, and a massive drop in grade. And the shareholders would feel like they've been robbed. So with this new initiative that's come in, it's constraining these economically. So how does that impact on a vein deposit? Well, it means that if we've got one vein that's kilometres away from another or very, very deep or incredibly narrow with not enough grade, then we can't list that as an inferred resource because it's something that may never be mined. So it forces companies to get critical mass and to drill off veins that are actually mineable, that you can build a mine plan around. And when you go forward and convert those categories into indicated, it's more likely to be quite similar to what you already had. So it's a significant change, a lot more work for us and for the independent qualified persons. We need to bring a PEng or a professional engineer in to sign off on the economics, to sign off on the stope optimization. So it's an additional thing that we need to add into a 43-101 and a resource statement. But all in all, I think it's a very positive thing for the industry because it reduces the risk and reduces the speculation and reduces the early stage arm waving of how massive a resource can be because it's forced to show economic constraints right from the beginning.
And it sounds like a lot more rigorous of a process than some of the other resources just in a mining shape, right? It's not the same thing. Is that correct? There's a more of an optimization process that goes on in the background.
Yeah, so it's not just defining a mining stope, it's actually defining the economics of the mining stope. So we don't just say this is the shape we're going to mine. We have to say this is the shape we're going to mine and this is how we're going to mine it. And this is the economic cutoff grade that we're going to use. This is the stope levels. So it's looking at what a potential extraction scenario and what the cost of that potential extraction scenario would be. So if your veins are very low grade or they're very narrow or they're discontinuous, then it has a significant impact. We're quite lucky because our veins are very continuous. The grade's very continuous as well. Within those structures, the structures are generally quite linear. There's not too many offsets. So it's actually okay for us. But some other projects who may not have good continuity, may have a larger nugget effect, then it really reduces what can be economic.
Thank you. And then going into the measured and indicated for a future measured and indicated resource, this would also simplify what you're doing now, right? It streamlines the estimation processes from there on, right?
Yes, Magda. It should make the step from inferred to M&I less of a massive jump. We still need to do infill drilling to do the conversion. Generally, there's less of an impact of the nugget effect when you drill to M&I. With high-grade veins, or particularly with what we see at Bralorne, we expect a probable increase in the grade because we've got more pierce points, so more chance of hitting high-grade gold as we drill. But it certainly shouldn't have a massive decrease in grades, tons and ounces, as we've historically seen when M&I resources come out.
So then zooming out a little bit, can you tell us a little bit about your resource ounce target range and expected split of open pit versus underground?
Okay, so the range that we've socialised with the market over the last 2 years is between 1.5 and 2 million ounces, and it's at 7 to 9 grams per tonne. Our estimate of that was for an in situ resource, so this is without the stope optimisation. All as I can say at this stage is that we're well within that range. We're well within what we promised our shareholders in the market that we'd come out with. What we're waiting to see is the impact of the stope optimisation on that. So we should have that within a couple of weeks. Our independent QPs who are validating our resource are currently right in that process now. It's the final stage of the process. So we should have those final results, tonnes, ounces and grade relatively soon. And that'll then lead on to that maiden resource, the mineral resource statement.
And then can you speak a little bit about the significance of this target ounce number given the grade target? Because there's lots of high-grade deposits, high-grade mines, but often the common denominator amongst them is a very short mine life. And Bralorne looks very different from that perspective. So can you speak a little bit about that for us?
Yeah, Bralorne's quite different for a number of reasons, and the two dominant ones in that, I guess, or the three dominant ones are the structural continuity of the veins. So they're very continuous. So once you identify a vein, And we've seen this in our drill targeting. Our results from drill targeting are incredibly high. When we know where a vein is, we can drill it out for kilometres along length and down dip. So the along strike and down dip structural continuity of the actual veins is excellent. It's certainly what we believe one of the best in the world. Certainly one of the best of one of the ones we've seen. Once you have a structure, then you've got to worry about where the gold is in that structure. And gold tends to get deposited in ore chutes. And our chutes are relatively vertical. That's how the gold comes up and gets deposited. And what we also see is the grade continuity in these chutes is also very high. So once we're on a high-grade ore chute, you can follow that ore chute for literally kilometres. So they're two of the main things that the reasons why Bralorne was mined for so long. It was the longest running gold mine in British Columbia and also the largest producer. It's still the largest production gold mine in Western Canada. It's produced more than what was produced at SK Creek, at Afton, at Barkerville, even at up at Victoria Gold. It's still Western Canada's largest producer. On top of that is the grade. Now, our expectation of the grade is sort of 7 to 9 grams for an inferred resource. And now, the big question is, why is that less or almost half than the historic production, which was 18 grams per tonne? And that worries some people. Oh, all the good veins were already mined. What's left was just waste material. Well, that's not really true at all. The reason that the grade that we see in our drilling is less is because of the drill spacing that we use and the average grade that comes out. So the expectation is with more drill holes that the grade will start to approach that historic average, which was nearly 18 grams per tonne. The mining methods we'll use, we're looking at long hole, so there'll be more dilution in those veins. So our mineable grade will be less than the historic average. We don't expect to see 18 on average. We may see 18 or 20 in particular veins, but in general, this is an orogenic vein system, so it's relatively homogeneous. We can expect to see the average sort of within a relative standard deviation, average grade across all of these veins, and for that not to change for the life of the deposit. So we expect going forward to have quite a similar deposit to the one that was mined for 40 years. We don't see any difference in the veins, in the geochemistry of the veins at all. The only thing that we see changing is the grade increases with depth, the deeper we go in the deposit. So our expectation is that Bralorne can have a similar to mine life as to what it's already had, depending on the mining rate. We see this first mineral resource in the range of 1.5 to 2 million ounces, but we clearly see potential to be able to drill this to 5 or beyond 5 million ounces, which, depending on the mining rate, really builds a long life production project. And really, this is nothing new. This is what we already knew from historic production, and one of the reasons why we got interested in Bralorne in the first place. This is really a world-class project, and we believe it can be again. And that's some of the areas we've been drilling close to surface allow us to be able to do quite inexpensive mining in those areas.
And then back in May, you had an update saying you expect to include 11 veins in the resource, 6 from Bralorne, 2 from King, 3 from Pioneer. Is that still the plan?
There's probably going to be significantly higher number of veins in the resource. We've certainly hit a great number of veins. There's probably, I think, nearly 85 veins that have been intersected. It will probably depend on how the stope optimization comes out as to what of those veins make it to the resource. You know, these veins are all generally that there are 2 main vein sets that are parallel to each other. So one vein set that's quite long in continuity, and another vein set that sits in between those veins. So really it's a large number of veins. A lot of these veins won't make it into the resource simply because we don't have enough pierce points in them. So that'll be what our next phase of resource expansion is converting a large number of these veins that may have just a couple of holes in them. So we identify where they are structurally, but we just don't have enough pierce points to be able to bring them into inferred or indicated category.
And can you tell us what the spacing or offsets are between the veins and how it could potentially support multiple mining fronts?
Yeah, one of the great things about Bralorne historically was that these veins are parallel. And on average, we generally see, a vein everywhere from if we look at a cross-section, every sort of 30 or 40 up to every 100 metres. So there's lots of veins. They call them en echelon sets or parallel sets. So we see a lot of the main veins around about at this frequency, every 100 to a couple of 100 metres. But there's a lot of other cross veins that sit in between these veins. So the mine planning would allow development along multiple fronts of these veins from multiple levels, and then little side stopes that look at some of these cross veins, which generally are wider and higher grade, but smaller tonnages in general. Because there's such a large number of veins and we've got a lot of access points, it's quite feasible to have a large number of operational fronts, which really comes back to economics. How many jumbos do you want active? How many mining teams do you want active? How many fronts can you operate in the time space that you have to get the tonnages out? Historically, everything came out through shafts. That's just the way vein mining was done in the 20s to the 70s and 80s. We've seen a significant change to ramping and using declines, and I expect certainly in the first kilometre of development, ramping will be preferred. So the ability to mine at larger tonnages, because you can truck it out relatively quickly. You're not waiting for the shaft to go up and down with carriages in it. And then, historically things were trammed out, so they'd bring it up they'd bring it up and then they'd have to haul it out along tracks. So all of that's changed with modern mining techniques. It's all trackless, it's all decline ramp driven. So the volumes are much greater than how things were historically.
And then your last press release mentions 70% of the resource is expected to be new ounces with no historic mining. So can you speak to the size of the ownership gaps at Bralorne and how that creates an opportunity to have almost like a new resource in an established area?
Yeah, look, it all comes back, Magda, to sort of the history of how mining tenure was managed in British colonial times. It was a thing called Crown grants, which required 4 posts in the ground, and they basically gave the ownership down to the centre of the earth from the Crown. So they were granted by the king or the queen at the time. So in the early days of mining, things were done on a small scale. Generally, people came in by hand. They used rastras to break the rock up. They didn't have mills. So it was a lot of hand mining. So it was a much smaller scale. So often companies owned a vein or several veins, and they drive in. And because of the fabric of the Crown grants, there were lots of different owners across these large areas. And throughout time, as mining became more efficient and became more mechanical, and companies that were very efficient at mining were able to purchase adjacent Crown grants and consolidate the areas. Bralorne itself was only consolidated in the 80s after mining, and only fully consolidated by us last year. So there was a lot of pieces that were owned by other companies, and many of these companies or individuals didn't have the capital to put small-scale production or mining in. So they often sat on it and waited for somebody to acquire them. Towards the end of life of the three mines, there was some consolidation. Bralorne and Pioneer and King all ended up being owned by the same group, Bralorne, Pioneer gold mines. But because they just got these Crown grants right towards the end, they didn't get to do any mining. They just started to do development into these areas. And for those of you who've seen the long section or the leapfrog model that Matt shows, what you'll see is there are drifts that have come out into these gaps, but there's no stopes, there's no mining. And it's simply because that they just were able to acquire the grants right towards the end of life of mine. Some of these are the Pioneer extension. Well, we just bought that in 2020. That sits to the southeast of Pioneer. Significant development in there, very limited mining, simply because it was held by another group that wasn't capitalised. So really that's what it's all about when we talk about ownership gaps. So that's worked very well for us. It doesn't mean there are no veins there. It simply means that the people who owned those areas didn't have the capital to exploit the mines. So there's about a kilometre between each of the mines that was owned by other entities. So between King and Bralorne, there's about a kilometre gap where there was no mining. And between Bralorne and Pioneer, there was a gap where there was no mining. So most of our targeting and resource work has been to target those areas that weren't mined. Our initial plan, before we validated that those areas still had veins, was to go deep, was to go underneath the historic veins, because we know these are orogenic systems. They go for kilometres. But it's very expensive to get underground and drill things very deep. So when we did our initial targeting and we drilled some holes, and we found that the veins just continue straight through these ownership gaps, then that became our focus. There are also challenges drilling around old mines and old stopes. And some of our shareholders may have been following the Pure Gold project that has some of these challenges that are chasing remnant areas. So it's quite difficult and quite expensive to get in and manoeuvre around these areas. Some of our early concept testing was in remnant areas, and about 10% of our resource will be remnant areas, but they're large areas. So they're several hundred metres along strike and several hundred metres at depth. About 20% is along strike from these areas. So the resource modelers do a buffer zone around the stopes and then model outside of these. But the vast majority, 70%, is exactly what you say. It's almost a brand new ore body. These veins outcrop at surface. They daylight at surface in these areas. It's quite incredible. And we've drilled them down to 700 metres and they don't stop. We know they continue to beyond or to the levels that historic mining went, to 2 kilometres and beyond. We just wanted to drill what was relatively expensive and easy access to put into production, and that's basically from surface. Some of these mines have already got historic workings in about 100 metres, and then they start to hit these vein panels. So it's really quite fortuitous, and we're excited about the concept of being able to define more close to surface veins in this camp. So far, we've only explored this about 5 kilometre strike length of these 35 kilometres that have vein outcropping. And much of this was never in that core area, was never owned by those core producers. So there's a lot of potential there to find close to surface veins there as well.
And then we just had one question in from the audience that just came in. It's about the lower grade bulk tonnage material and whether it will be included in the coming reserves or in a secondary estimate.
Look, the reality is we just didn't get enough holes into that bulk tonnage to define resource. With everything that's happened in the last year or so, with fuel prices, increased in drilling, delays in assays, really we just shifted our focus to defining the high-grade vein resource. That said, we think there's a great potential there in that bulk tonnage, and we want to go back and put more holes in. There is an area that we had enough pierce points to get some inferred classification, but it probably won't make it to this resource. We want to do drilling, step-out drilling along this, and particularly the big section that we did, the kilometre-thick section, we want to do 400-metre step-outs of that and test the continuity. The reality was we just didn't get the time and didn't have the metres to expend on it at this stage, but we're certainly super interested in it.
Makes sense. And then my last question for you, the elephant in the room, when do you expect the resource to be released?
Well, we're hoping within a few weeks. We've done everything we need to do. It's all with the independent QPs who are validating every vein, every resource block. They're the ones who are doing the stope optimization. So my understanding is they're in the middle of that, so the very final stages. So I'm hoping within a few weeks we have that out, have that out to market.
All right, thank you.
Thanks, Magda. I've got a couple of questions for you as well, Terry. So can you comment on New Gold and their strategic ownership, considering their challenges at Rainy River, if they will continue to stay as an investor, and if you think they're a likely acquirer?
Yeah, look, really interesting times for New Gold. That they've had some challenges earlier on in the year. I think Renault and the team's done an incredible job. That they've really turned around, turned around their production, turned around their costs. Rainy River was more an act of God. They just had an unseasonal flood in there that stopped their production. This last quarter, they seem to have hit their targets really well. We've seen their market cap and share price recover. So I think they're on track as a company. Certainly looks to be doing really well. They're certainly continuing as a strategic shareholder, as far as I understand. They've made no indication to us that they want to exit their position. They obviously, when the last private placement we did, they didn't participate, and their reasoning for that was simply that they had to get their house in order. So I totally understand that from a investment perspective. They're a big company. They've got some big projects in activity. They've just got their C zone permitted. So that's another massive block cave deposit. So I think New Gold are going from strength to strength. Whether or not they're going to buy us, I think that's probably a better question for Renault and for New Gold. I think they certainly came in to have a footprint and have operational interest in the region. Whether their final outcome is to buy us, or whether it's to invest, or whether it's look for ore production, we will wait and see. I think they probably need some time to get things under control. We're in constant discussions with them. They're a very good partner for us. They help on the technical side when required. And if we're looking for block cave knowledge, particularly there at Pioneer in the bulk tonnage, then they'll be the first people that we talk to. Why they would invest to a cornerstone position and not have a long-term view to acquire us, I don't know. But the way the market's been over the last year, it's really been challenging times. We've seen the gold price come off from nearly $2,000 US an ounce down to low to middle 1600s. That's had quite an impact on the producers, the intermediates and the majors. To hit that with a double whammy, all of their production costs have gone up, and this is mainly driven by fuel, We've seen fuel increase a lot, and we've seen real inflation increase an incredible amount. So it's had a major impact. We've had gold price go down and costs go up. So it's put producers in a nasty box. And really, we've seen acquisitions dry up pretty well. Now, I can't predict the future. Otherwise, I'd probably be a lot more wealthy than I am. I think it'll all depend on what happens with the fuel price, what happens with increasing interest rates. If interest rates start to come down, then more money comes back into gold. We'll just have to wait and see. Certainly, we, as a junior, continue discussions with New Gold and with other strategics. New Gold essentially also sees us as an investment. So if there's a good offer, they might take that as opposed to try and buy us. I don't know. We'll really just have to wait and see what the world provides to the market. It's certainly a tough time for the market. And I think all of our shareholders probably noticed that. For junior companies, we're seeing a 70% drop in our market cap and share price on average across the board. And this has outpaced the gold drop by 30%. So I guess it's a great time to be investing in good projects, in good companies, and good management teams, because things are below valuations. We've come from an $80 average per ounce, EV per ounce, to a 25, 26 EV per average. So all those investors out there who are brave enough to invest, I think you're going to be greatly rewarded over the next couple of years.
Mm-hmm. I tend to agree. Are you expecting any other exploration results later this year from the summer-fall program elsewhere on the land package?
We have actually started drilling at a relatively slow rate at Bralorne, so looking at resource expansion. We're taking a conservative approach to our exploration at present. There's a lot of uncertainties in the market and availability to capital in the market. So we want to be quite prudent and take a conservative approach. For the time being, 9-10 rigs scenarios has gone. It's not the time to be aggressive in exploration, but we will have some results coming in, and these results will be resource expansion of this coming resource. We've planned it knowing where the best veins are closest to surface that give the best bang for our buck on drill out. So that program has initiated, and there will be some of those results coming in.
Okay, great. And
I'm sorry, Debbie. I think I don't know if I answered that properly. You're asking about the other land package.
Yeah,
outside of Bralorne, was that correct?
Yeah, maybe talk about other focus areas, and if you could go into a little bit of your plans for next year, that would be helpful.
Sure. All of our plans for next year are quite conservative and really based on market conditions and capital availability. If things change, then our plans will change. But realistically, up until now, there hasn't been much value attributed to us for our other great projects. So at the time when markets are difficult, it's certainly not the right time to be allocating capital to advancing projects that the market doesn't care about anyway. It's hard enough to get the market to care about primary projects, and we've seen that across the board. Everyone who's got resources has really struggled to get a proper valuation, and it's pretty tough to see a low level valuation EV per ounce when we know that in Canadian dollars, gold's over 2,000 still. So the value's still there. It's just not being given out. So we'll be doing basically the minimum that we need to do in our greenfields programs. All our land are protected. We do have land bridges, and we can allocate assessment across the corporation. So everything's protected for several years. So no shareholders have to worry. People who bought in for Spencer's Bridge, we are still advancing things on the permitting stage there. And if conditions improve, we would really like to drill some of our primary or top priority projects there. We're still very excited about Ladner. We've done some sampling of some underground stockpiles at Ladner. Things are looking interesting there. We still would like to do a large-scale soil and mapping program and transition to drill program and move towards indicated resource at some stage. But at the moment, all of this is off the table. Bralorne is the focus. Resource and resource expansion is the focus.
Can you discuss budget and future financing options?
Well, I suppose one depends on the other. We have cash in the bank at present. The options that are out there to junior explorers, including us at the moment, are relatively limited. There's not a great deal of institutional capital available. Royalty fundings are available, but also, they come with long-term project costs. So really, my view is that we have to look at whatever is the best avenue for capital raising at this stage. As we all are in a depressed share price, our last capital raise wasn't optimal. I think that's clear to me and all our shareholders. But we have to take what the market provides, and that's what was available at the time. It's likely that we look towards a royalty financing. Our royalty burden is quite low at Bralorne. It's always great to do a royalty financing when you're in production. You get a lot more money for it. But if you don't have the money to make it to that stage, then you can never sell that royalty anyway. So we've utilised royalty funding in early stages to get to the levels we are, and I think it's a good non-equity dilutive pathway. So that's something that we're seriously considering, and then our operational budget will depend on what that quantum is.
Makes sense. And I had a question just going back to something previously mentioned. Will the resource estimate include Ladner as well as Bralorne, or just Bralorne?
No, it's only Bralorne. We have a compliant resource at Ladner. We haven't done any work to change that. So no drilling at all at Ladner. So at this stage, it'll just be Bralorne. Sorry, Debbie.
Sorry, muted. I had a question about your 5 million ounce target. So how long and how much would it cost to achieve that, do you think?
Oh, well, I can calculate the math for you. We drill on average, it's all a factor of number of rigs, cost per ounce, drilling rate. In general, our drilling rate's in the 50 to 60 metres a day. Drilling costs, up until now, it was in the 325 to 350 all-in range. We're yet to see what the impact of inflation and fuel cost and everything else has on that. Maybe that'll push that up towards 400. It's a difficult question to answer because I don't think it's the right pathway to jump in and just drill off 5 million ounces when the market's offering enterprise value per ounce less than what it costs to drill it. So we really have to ask the question, well, do we go and raise and our dollar per ounce cost is quite good. We're at about the $17 mark, $18 mark. So our money in the ground brings back pretty good ounces, but it's a very small amount that the market's paying for that now. We're paying in the 20s. So really, it's a limited margin. So that's something that we really have to look at. Also, if we're underground and we can drill from underground, then it's a lot cheaper to drill that. The 5 million ounces, probably a little bit less than half, probably 2 million of that is quite deep. So it sits underneath where we are. So we'd probably prefer to drill that from an underground scenario. It'd probably take a couple of years, would be my guess, and I wouldn't want to pull a figure out of the air, particularly now with inflationary costs. But I don't really think that's the right pathway. I think the right pathway is to investigate in the midterm, is a production scenario best for Bralorne? We know these veins are there. We know the gold's there. So the question is, is it the right path to raise and spend the money to drill it off when really a production scenario, knowing that those ounces are out in front of a production scenario, it would be the best pathway.
And what's your current cash position?
We've got about 7 million cash.
And did the TGG share sale provide another $1 million that's included in that?
Actually, it isn't included in that, but it was around about 600,000. I think that final sale. We'd sold the majority of that previously when the share price was at a much better position. But this final one, it was about 600,000, I think, roughly.
Okay. One final question for you, Terry, because I know you want to keep it to the hour. And for anyone that asked questions that they didn't get answered, feel free to follow up with us and we'll make sure to get those answered. So Terry, last question. It's about your share purchases on the market. I think that you purchased about 1.5 million shares since September. Can you please comment on that?
Look, Deborah, it's pretty straightforward. Our share price is at the lowest level that we've ever seen it. And we're very close to what's probably going to be one of the best resources to come out in Western Canada for a long time. So, I believe in the project and I always have, and I'd much rather buy shares at 10, 11, 12 cents than buy them at 30 or 40 cents. Our valuation at the moment is well beyond or well below what an evaluation would be for the ounces that we're going to come out with. And the valuation for the ounces is well below what it should be. It's, $20 to $30 dollars per ounce versus 80. So, it looks like a pretty good investment to me. It's pretty straightforward. I just wish I had more money to buy at these levels. I think it's a great time to be doing it. I think anyone who's a gold bug understands that for whatever reason, there's a lot of worry and irrational selling going on in the market. We certainly know that our share price hasn't been at 14 cents since mid-2019. So the majority of things being sold are being sold at a loss, and whether that's for fear, whether that's for tax selling, I don't know. But certainly from my perspective, it creates a great buying opportunity if people are forced for whatever reason, because of cost, inflation, tax, if they're forced to sell it at these ridiculous levels, I'm certainly going to capitalise on it.
Well, I think that's a really good spot to leave the webinar. It's nice to see that kind of insider buying in the market and management alignment with shareholders.
Well, I will just mention it wasn't just me. I did a lot of it, and they'll see my SETI filings hammering it out there. But certainly most of our team also jumped in there. Matt and Charlotte, Andreas has always also been a considerable amount of buying there as at these low levels. So it wasn't just me, but I was the majority of it.
Well, it's good to see, especially when there's some breadth across the management team. Is there anything you wanted to discuss today, Terry, that we didn't get a chance to cover? Anything you wanted to drive home with investors?
No, look, I just want to mention to our shareholders and to thank our shareholders, the ones that have had the courage to hold on in a very difficult market condition. We've had a delay with the resource coming out. These things happen, and everybody knows for whatever reason. We can't control assays. The stope optimization was a new thing that we had to deal with. We can't control inflation and fuel costs that reduces the amount of meters we can drill. but the project is a great project. And it's one of many that the company we have. In the future, I believe, looks very bright. So I'm very appreciative of our shareholders who've had the courage when others have been driven by fear since the gold price comes off 30 or 40%, since inflation rockets, since all of these concerns come out, interest rates go up. So I know it has been a fearful time, and I know we've got some great, strong shareholders who are sticking it out, particularly our institutional shareholders. The future looks very bright, and we've just got to make it through this dark period in the world. It's not just the mining industry. It's not just Talisker. It's across the world. We see it everywhere. But, I think the future is coming good, and certainly this initial resource will be close to what we expect, and the pathway from there is very good, and it's a low-risk pathway, particularly with a project like Bralorne. All of this risk is done. It's already permitted. We know the metallurgy. It's low-risk future.
Agreed. Well, the S&P had its best month in 50 years last month, so hopefully that impacts our markets as well. With no other questions, I think we can leave it there. Thank you so much for the update, Terry. Looking forward to seeing the resource. Meg, did you have anything to add? I should have asked you.
No, thank you. Good.
And thanks everyone who participated. Feel free to reach out for one-on-one meetings or any questions that you have. Yeah, everyone have a good afternoon.
Thanks very much.